Hey everybody, DayTraderRockStar here, and a late high probability watch list for the week coming up here. I just got home from vacation last night. I'm in the office today at 7 o'clock just to kind of get things set up for a smooth opening tomorrow, Monday. It's about 4 o'clock. I want to try to get out a condensed watch list of some of I had to catch up myself because, believe it or not, it was very hard to pay attention to markets on vacation, especially when you're in the Caribbean. There's no internet. It's very hard. So did a lot of research. Got in here about 11 o'clock. It's going on about 3:30 now. And, I set up my screens in a new way to get prepared for tomorrow. I have some new things to bring to you. I'm pretty excited about that. Different ways of capturing some moves, being a little bit more organized. Whenever I come back from a vacation or something, it seems like there's always a tech issue. I had to restart the computers and update the software and stuff like that. So it's been taking a while. But I think I got things set up here for tomorrow. And like we left off on last week, before I went on vacation, getting up early, trying to catch those low flow poppers and, getting into the open and trading throughout the day. I'm looking forward to a great week this week. I followed the market as much as I could. And seeing day by day was actually hanging in there pretty good. And typically, when I go on vacation, the market goes south. And I'm not just saying that. People know that if they've been part of the station. It's just a weird coincidence that happens over the years. Whenever we're away from the station, the market seems to kind of get into a big splashdown. Now, everything held up pretty much until Friday. And Friday we had a little splashdown. And I looked at it, came back, and I said, all right. I went through hundreds of stocks, hundreds of charts. I saw that Bitcoin got hit a little bit more than the average stock, but it didn't look that bad. And I was kind of happy to be out of the battle this week because it seems to be in a drag out kind of slow grind, not much going on. And we're from looking at the market right now and seeing how things are set up over the last 5 days, we've come down into a nice consolidation, nice little pullback. A nice little pullback here, which is something that you want to do. You want to be able to understand the market's not always going to go up. We're going to have those pullback days, and trying to trade against that is sometimes a little bit more difficult. So I'd love to get that pullback and trade with the directional pop out of these flags. And it seems like my vacation timed this pretty good. I mean, it kept me out of a lot of kind of sideways action. And the market here, this is a 60-minute time frame, does look pretty good. 60-minute time frame looks pretty good right now. I'm contemplating going on the air with this, but it's Sunday, getting near dinner. I'm just going to try to get this done and get this out and get prepared for tomorrow a little bit more. So this is actually the S&P here, and again, the last 5 days, you can see we kind of popped out Monday, Tuesday, and then settled in, and then we sold off on Friday. And a lot of stocks reflected that, but a lot of stocks also show relative strength, like the consumer staples, cereal plays, General Mills, Kellogg, all popping. Oil stocks, some of those popping. So it was, but I didn't see any of the short-term poppers, but those you have to really pay attention to in the morning. We'll get back into gear on those. But there was, right before I left, I did put out a best bet for the week. And I've been watching it, and I tried to log in a couple times to buy some options on it, and I couldn't get a good connection. It kept on logging me off, so I said, you know what? Maybe it's a sign. I won't get in it. So I haven't gotten into Las Vegas Sands yet, and that one still looks really good. So let's just start off with that one, LVS. And that's on the HPS watch list, meaning once it triggers, this is what we like in this. Let's take a look at the daily. All right, so here was the daily pop, and then we were looking at this pullback here, and we were right about this level right here, and I said, we'll buy on a breakout above that $39 area, breakout of $39. And you can see we kind of popped on Tuesday right up against it, but we didn't get through it. I should say, that was 39. And now it really does look like a real condensed flag. It actually is quite healthy looking. I like the Las Vegas Sands, and even for me coming on vacation, I did a little casino gambling. And, that's not a good cross-section. I think a lot of these stocks are going to start to pop over the summer as more and more people get out. There's a lot of people, and summer's actually kind of winding up now, but, This, I did like the pullback here. I did like the strength holding above the 2050, and I actually like the pullback here. It hasn't really pulled back that aggressively this week when the market has sold off hard on Friday. This almost closed break even. So still looking for that pop. Probably will buy the 3-day consolidation breakout here. That probably brings us through the trend line, and we will eventually get that pop up on the hourly. So that's still in play. I like it a lot. It waited for me. I'm glad. Thank you, Las Vegas Sands, for waiting for me. And the other one that was very similar to that was Wynn Resorts, WYNN. And again, this is you see what with the difference here. You kind of have this nice little channel 1, 2, 3 pattern, and on the Wynn Resorts, it's kind of just a not as big as a pullback. I mean, you have a 3-day pullback. We're holding the 50. We're not quite oversold yet on the daily. I'll actually take a look at the daily on that, on the Las Vegas Sands too, which, again, next couple of days should be interesting. We could actually put in a divergence here because it's so high on the stochastic rotation. Even if we took out the previous low and kind of started turning back up, that would be an even more aggressive buy signal for us. So I have a lot of things liking about that LVS. And again, the Wynn, I keep an eye on it. Big exposure in China. China starts to get going, which they've been kind of rumored to be doing. You can actually see the results in the Alibaba. Well, not really too much results there. I haven't been in this one since back here. You can see where some of the annotations are. We did have a nice pop up to the 200, and that was pulled back. But I'd watch that Alibaba too, for the China play. All right, let me. Sure, I got this. I just want to catch you up on the last trades I did take before we before I left here. So I added to my position at NU. Some of these were cheaper, longer terms, little swing plays here. And right before I left, I added to 100 shares at 425. And now guess what happens? On my vacation, it pops up to 587 and pulls back the next 4 days. And it's about 462 right now. So still in the money on that ad, but probably could have took some profits, but I didn't have any orders in to take us out. And it's one thing I always stress on these cheaper stocks. Always put an order in. That way, so lots of times pre-market, these things will have news, as you'll see, and they'll pop and then they'll come back down. In this case, probably had some time to get out of it, but I was in no place to get out of it. So I'm still holding my NU, which is the Warren Buffett type of bank, South Latin America bank. The VRNA, we ended up selling that at 1340. It's hanging around that 1201 area, which typically is a good sign. I ended up catching that nice pop. So that's actually holding up pretty good. Sold my MKD for a $78 loss. Just wasn't doing anything. Again, some of these, you get the pop and it just doesn't go. So I ended up taking that off. And then bought MGAM on the pullback here at 374. It's trading at 354. So again, looking for maybe that pop. Not kind of a dangerous stock, an initial IPO, or at least something that just started trading back there, popped all the way to 20, pulled all the way back down to 3. I like to get that bounce. Some of these are just kind of fishing for these possible bounce play. I would put my order to take that off between $5 and $7. Ended up buying some calls in ADMA. That went out on an alert on the 12th, and that's working out pretty good actually. The 12th, it started moving back up. We had this nice little flag, had a nice little pop up to about 362. Those options go out to September. They're 250 calls. So and there is a top trend line here. I wanted to see if we could get up to, which I still think there's an opportunity there. We'll see what happens this week. There was a little momentum. Still looking pretty good, Those options I picked up were for 17 cents. 17 cents. Let me see what they are right now. Let's see if I could get them up on this. My option chain going out to September. 26 days away. The 250s are 23 cents. 23 cents. So up nice. So we'll see how those play out. Sold to TGL. Let's just take a look at that. That was another IPO. Look at that. Treasure Global popped. What did we get? Sold that we sold that at $11. Bought that at $6 that day. Sold it at $11. Went up to about $18. And now look where it is, $5.42. So these things are very, very dangerous. The game that we play early morning, getting in here at 7 o'clock, 6:30, 7 o'clock, you're looking for these pops. These things actually pop earlier in the morning. And there's usually a strategy. If it shows strength going into 7 o'clock time zone to 8 o'clock, 9 o'clock to open, there's different strategies we can trade on these, especially it all comes down to news and how good the news is. So glad to be out of most of these. I am holding some stinkers. You see that DNA, we ended up taking some profits on that, and it's a good thing we did because it popped. I got at it 443, right around here, got up to about 485, and now look where it is, 288. So maybe a re-entry on this one soon. 288 really got hammered on that last week. So that's a nice little review of what we've been getting into. Now, again, next week, there's a few stocks that are pulling back that I have my eye on. NET, pulled back to the 20, had good earnings. It kind of ran up here. Now it's pulled back here to the gap area. Keep an eye on that gap close, which just comes in around $58. That's 10 points down. I don't even know if we're going to get that. This is what we call gap support. Anytime you come up to a gap area, if you come up from underneath it, that's gap resistance. You see back here, it goes boom, and then hits it again, and then once we gap above that, then we get gap support. So we're at gap support right now. If we break down into it, we look to get some support at the close of the gap, which brings us under the 50. Now things have gotten weak soon. A lot of things have given it up. Not much has moved. I mean, you take a look at some stocks you would think have been good bounces. Square, no, it turned over again. Stocks that you would actually think have a better chance at it. Facebook, excuse me, that's not Facebook. Let's go to Meta. Meta even kind of pulled back a little, 167. You got to be a little careful going into this week. See how it starts off. Apple has been showing really good strength. Really didn't pull back too much other than on Friday. And that's kind of an old trend line I had here. Kind of bopped through it. Now we're kind of sitting right on at 170. All right. A couple other ones on my list, and then we'll send this on its way. Watching the Snowflake. I ended up picking up an option on Snowflake. But again, that kind of got pulled back too. We're going to need a miracle on that. And then, let's see what else here. Biogen, BIIB. It's another one that we're waiting for a breakout of the $222 area. That's $222. That's a major level on that stock. Got up to it again. It's pulled back. Now it's 214. Does it have a bounce? It's not quite oversold yet, but it's getting there. So some of these are giving us another opportunity. Duluth, I mentioned this on the watch list. This actually continues to look good. I don't know how sexy of a stock it is, but I circled the area that I was interested in, and it's moved up since then, and then kind of pulled back just a little. It's $9 stock. It's not that great, but nice little downward channel. Interesting stock. 15 million share float, which is not a lot at all. JP Morgan, kind of pulling back, not oversold. Again, important to get that, get the odds on your favor. If this starts to pull back, we start to break down towards lows again. We'll see when this thing starts to rotate back up and you have the forward momentum. That's when you want to be long. Right now it looks like all systems are turning over and better shorts is setting up. Now here's one thing I want to end with. Other than I'm glad to be back. I always hate missing the markets. It takes me a couple days to warm back up into it and get a feel for it. We're going to be trading the divergences tomorrow. I set up my stock so I have good views of all the divergences. I had some good emails I got to get back to you on. I might discuss those tomorrow too. Show starts at 7 o'clock, maybe a little bit earlier. The one thing I want to show you here is the new charts. I ended up redoing my well, these charts still have the indicators on it, the 9-3 and the 14-3, right? This is on the 5-minute, but down here I have what's called a divergence alert or a spotter. So when there's a divergence, it's going to give me that candle. It's going to be a 9-3 and a 14-3 or a 9-3, depends on what it is. So if we take a look at the S&P here, this activates the divergence script, the divergence formula on whatever time frame is shown here. So in this case, this is the daily divergences. As you can see, they don't come around that often, and when they do, here's a beautiful one right here. It's pretty much named at bottom. Here you had a little bounce and a downward trend. Here you had a much bigger bounce and a breakout. Here you had the bounce. Here you had a decent bounce and a nice little move up. Here you kind of had a little bounce. The odds are that you're going to get some action on a divergence. Lots of times you'll find a stock that really reacts good with it, or the S&P or the index, which I like to use. So the SPY might be a good one to take a look at. So you can see here, this is on the daily, but I have something special to show you. So you can see, really, look at this divergence here. Now again, the 9-3, sometimes maybe the 9-3 or the 14-3 will come up and not the 9-3. Sometimes they'll both come up. I prefer when they both come up. And I've take the double signals. Here was a good buy divergence right there. Then we had another one here. And what I would say, even though that was a good one and it pushed up, it never took out the lows. That was a good one. Here we had a divergence, and it did kind of gap down and chop around, and probably would have been a fail. This would have failed for some reason. This one came in as a 9-3 divergence with a little candle and ran back up. And again, you can see sometimes it takes, and again, this is on the daily, on the SPY divergence. It doesn't happen all the time, but when it does happen, it's usually within I would say 10-15 days, there's a significant bottom being played when you have a divergence. All right, you have a significant bottom being played out. Now, very rarely do I go out. Let's take a look at the SPX. Same thing. You're going to pretty much get that same setup. Look at this. Look at the cluster of divergences here on the COVID lows here. That cluster, it was like constantly. And then we had our first pullback on the S&P. That was pretty much an aim. And then back here, you can see just in the general area, we have that bounce. We have that big bounce. We have this big bounce. And even here, we had a pretty decent bounce. We haven't had anything since. But now take a look at the weekly. The weekly is very interesting. The weekly does, again, the big divergences. Last time we had a weekly divergence was in the crash of 2012, or 2011, 2012. It wasn't really a crash. It was a little pullback. And then before that, it was 2008, 2009. And that was pretty intense. Now, we're here all the way back here to 2022. And look at this divergence back here. And it was really called the bottom. Really did call the bottom on this. Now, it's kind of extended. It's embedded. It's on the weekly. Very hard to time that at this point. If we do turn over and rotate, I mean, it's this divergence signal is kind of past. It's definitely past its prime. But it was interesting to see that once in a few years you get that shooting star, and here it was. This was your opportunity right here. Dual divergence on the weekly. That was your opportunity. Now it could lead to much higher gains from here, as it did back here. As it did right back here. This was as it did right here. It continues to go up. So this is a significant bottom. Very significant bottom right now. It's playing out. Let's see if I can show you some things on the chart. But it will be easier now that I'm always checking the S&P on the 5-minute cash chart. So it'll be easier to see these divergences on the 5-minute and when they give us good entries. All right, look at that. That's a 9-3. It's a 14-3. Here's a 9.3 and a 14.3. Again, they're a little bit more, frequent and a little bit more choppy, but the majority of the time you're going to get you're going to get a rotation in the direction of the divergence. Might not happen every single candle, but the set of candles that come next are typically in the direction of the divergence. In this case, buy side signals. Also, I restarted the Rockbot. Rockbot is up and running. If it did go down while I was away, I apologize. Sometimes we do have office shutdowns here when I'm not here. So, but everything should be up and running tomorrow morning. I'm looking forward to it. I would setting up some automated trading for tomorrow myself, and I'm looking forward to that. And I will catch you early in the morning. I hope this brings you some knowledge and some preparation for tomorrow. And we'll see you then. All right. Happy to be back.